Hello, everybody. It is that time. It is Friday and it is time to talk real estate. And that we are going to do today. And it's a rainy day here, which is not the norm. So if you hear some noise in the background, it's probably not, you're not imagining it. It could be rain falling from the window outside. But before we get into it, I want to know where you're watching from, because that's always helpful for us to know kind of, are we talking to somebody local or are they out of state? So I want to know where you're watching from. I also posted a poll on my community tab and my YouTube channel to just kind of ask a question. We'll go over that at the end to see kind of what everyone's thoughts are. And we're going to talk about the market because pending home sales have dropped, even though the mortgage rates are falling. So what does that mean? And the rates were just cut by the Fed. And what does that mean? But now they're climbing back up. So we're going to get into all of that today. And to help me talk about all of this is my friend Matt. You're muted.
Hello there. Yeah, we're battling through the rain here.
I know it's very abnormal for us to have this kind of rain, especially this time of year. I mean, we might get a monsoon, but it doesn't stick. It's been raining all day, like heavily raining.
Yeah, we shut the city down when it rains.
Right, I know.
Stay away from the highways.
I was driving on the highway. Literally, everybody was driving with their hazard lights on, going 45 miles an hour.
Hey, you know what? If you can't drive in the rain, at least you're respectful of it, right? And
I know. That's what I say too. So as we go through some of this stuff, I just want to make sure if you guys have questions, ask in the chat. Type those questions in the chat because that's what we're here to answer questions.
It's our favorite thing to do.
It is our favorite thing to do. Absolutely. So let us know where you're from and ask us some questions as we go through all this. Like that's what we're here for. But crazy things are going on in the real estate market. We were just talking about this a little before we got on and started talking live. And I was telling Matt, I said, I was just talking to a seller and they said, kind of what's going on in the market. And I said, I would have told you something different last week than I would have told you this week. Things are shifting. Things are moving. So Matt, how are you seeing with any applications or anything like that? Anything different this week?
I would say for the first time in like 45 days, I'm at least seeing a slight uptick. But it's from who is interesting. A couple investors are kind of seeing, hey, there's some homes that have been on the market for 45 days that maybe there's deals out there. Short-term, long-term rentals. Had a good call earlier today where with a move-up buyer that's considering it, because I think the conversations are a little different when we're talking about rates in the low sixes versus 7%. And I think the media message is slowly getting out there. Obviously we had the Fed cut, rates have gone up a little bit higher, which we'll talk about. But I believe we are in a time period where it makes sense that our market activity should pick up.
Yeah. So Kev Grant P, how's the housing market in Lichfield Park? I'm trying to sell there. Had to move out of state, Minnesota. So it's super stale. How I would have a lot of questions. Like how long has it been on the market? What is the feedback that you're getting? Kind of all of that. The market out in Lichfield Park, I mean, I think is the same as everywhere. Well, let me pull this up really quick because we've got this.
Lichfield Park is an awesome area. But it's not a huge area and traditionally doesn't have a tremendous amount of inventory.
Right.
A lot of custom homes. It's not very tracked versus a lot of other cities.
Right. So I'm going to pull this up. This shows you the Cromford Market Index. And now the Lichfield Park is not on this list because it's too small. But we've got. Let me
see. You'd think after doing this for 20 something years here, I would remember every zip code.
I know. I can't remember that.
Let me just pull up. It's
but this shows you Goodyear.
85340.
Okay. Yeah. I mean, this shows you Goodyear, which is close to Lichfield Park. And they're still in a buyer's market, but they're going up. They're up 3 points from last month. So again, a lot of it is going to depend on the house. So you said about 120 days, June. Near Wigwam Golf Course. That's a good. It's a good area near Wigwam.
I'm showing 5 months supply in 85340. This is just a market snapshot on Cromford.
Yeah. I'm going to tell you, give it a little time. Yeah. I think things are shifting right now. 120 days is a long time, but you also put it on in June in our summer when that is not our season. So
that's very, very true. I think if you were putting it on now, it would be a different story. And, days on market active, the average listing is like 93 days for all price points there. So I don't think it's crazy.
Yeah. So David Smith says, I'm in Buckeye. There are several people on YouTube who have been examining the data and telling us that this crash has been coming for 2 years, but nobody believed them. Yeah, David, I don't believe him either. I got to be honest. If you're listening to, I've been trying to figure out, I've had a feeling that something like this would come up. It's weird, really weird. I had a feeling something like this would come up today. I was trying to figure out a way to say the name without saying the name. And I can't think of it. But if anybody knows, like one of the crash bros out there that has been saying that it's going to crash now for 4 years, I think. 4 years.
Yeah. If you say it every year for like 20 years, you might be right eventually.
Yeah, I know.
But
I don't, again, Buckeye's a different market. I'm going to put this back up there. Buckeye's a different market because it's in the outskirts. Oh shoot, there it is. It's in the outskirts. So Buckeye, I mean, you're at 50. You are really, really deep in a buyer's market. You're competing against a lot of builder product. There's a lot of people that moved out there and then quickly realized that a 60-minute commute was not okay with them every day. The 303 being out there now is good because they can kind of come in on the 60 a little bit, or I'm sorry, come in on the 10 and then shoot up the 303 if that's the side of the valley that they work on. But yeah, I'm just gonna say I don't see a crash coming.
No, Buckeye is an extreme buyer's market. And keep in mind too, is that you do have some different areas like Verrado that are some really nice master plan communities, that homes constructed by some really, really quality builders. Like there's some quality construction out there. But some like the outskirt, lower price point track homes, I can say, that there's people that have bought a home in the last 3 years that, not heavy losses, but they haven't made any money in the last couple of years in terms of equity.
So Trail 70 Brent says, I'm from Columbus, Ohio, but looking to become a snowbird and find a condo in South Scottsdale or in the East Valley. I might have something for you depending on your price point. So let me know. Call me. My number's down there.
Scottsdale, again, well.
Right. It's going to depend on your price point. But I mean, this market it's crazy. And Kevin says, thank you both. Yeah, you're welcome. Thanks for asking the question. So again, I mean, I'm seeing stuff move. I mean, in my neighborhood, I've been telling people there were 2 houses that came on the market in my neighborhood, and one of them had been redone, not necessarily to today's standards, but it was redone. It was really nice. Great view, the whole deal. Sold, had 3 offers. It's going to go over list price. Sold in like 3 days. The other one came on the market, and I know that the seller can't close until like mid-December, and it's September. Can't close until mid-December, which is not always the best thing for a buyer, especially if they need to get here, but went under contract in 2 days. So stuff's moving. More things are kind of coming on the market. I think some sellers are getting the hint that they've got to do some stuff to their house. I've talked about this a couple times. I've had a few buyers that we've made offers on houses that were way overpriced, and we took a back seat. We just kind of sat back and said, we're just going to give you time. And one of them is now under contract on the house at the price that he was willing to pay, 4 weeks ago now, because the seller's finally like, okay, fine, I'll take your price. So there's some of that going on too. So the market is moving. Some sellers are just having to come to terms with what that means. But then again, I mean, if you've got a good house in a good location, they're moving, they can move quick. I mean, there's another one that around the corner from me that it got multiple offers as well. It's not going to sell over the list price, but it's going to sell right under the list price. And the list price was high. Every one of my neighbors was calling me saying, do you think they're really going to get that price? And I said, yeah, I was in the house. It's beautiful. So Buyers are
rooting
willing
for
to
'em.
pay. I know. Buyers are willing to pay a higher price if the house is done.
Yeah.
And we continue to,
I think
you know,
especially in the luxury side.
yeah. 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 What did it? Boldly go. Hate to say it, but I've given up on the idea of buying a house. I only make 61,000 a year, so I'm out. If you aren't dragging in 100 grand or more, then you almost at the poverty line, in my opinion. Yeah, that's tough. I'm not gonna lie. I mean, that would be tough, but I still think there's a way that you can do it personally. But it would probably take some sacrifice, and it's probably going to take a couple years.
Yeah, no, I agree, and I feel for you, honestly.
I do
like,
too.
I come from a family of teachers, and you know, whenever I talk to a teacher, you know, a single mom with a single stream of income, it's so challenging. And what I would say is, you know, you're going to have to pay to live somewhere, right? And you know, what I would look for would be condos with low HOAs. A lot of them here in the Valley carry very low property taxes. I would look at buy down strategies, right? Like I had a guy who was on a severe budget, lived in a manufactured home for 20 years, and he's buying his first home. He closed in like 2 weeks, and we used an extreme buy down strategy, FHA, and we're going to end up closing on his FHA loan at 5% permanent rate. And you know what? I'm not going to say it's a cheap payment, but obviously a lot more affordable than what you see, because you know most people can't afford a $3,000 mortgage. No, and I totally get that, and I think that's our job, is Sean's job, my job, is I feel like we want to treat everybody that comes to us the same. So we're trying, you know, I think we're very solutions oriented, trying to create a custom solution where we can try to bring it in as much as possible in terms of a budget.
Yeah. Grace A says, find a rent to own. I'm torn on the rent to own. I know. I don't love it either, because I feel like it's a waste.
You give your reasons first and I'll give mine.
What's that?
Said you give your reasons first and I'll give you mine.
Well, I don't love the rent to own, because I feel like here you are trying to save your money to buy a house, and you're only getting a portion of the money that you're giving them to your down payment. I also don't, I feel like it's structured as a win for the owner, the current owner of the house, and not for the buyer. I don't love it. And
yeah,
I know that it can work, and it can be a good thing for some people, but I've never seen it structured for a buyer. I mean, I've had a couple buyers. I've actually had a couple sellers that said, you know, I would be open to a rent to own, and then the buyers come in, and oftentimes the sellers, in my opinion, want to structure it so heavily weighted in their favor that it doesn't make it a good deal for the buyer. And I get that's why they're buying it, right? That, you know, it's got to be, but I don't find that it's advantageous for a buyer to do it.
Right. The biggest problem with those, in my opinion, and I've looked typically at companies that do them, not individuals, in terms of the sellers, is they are all going with the assumption that the home is going up XYZ% per year. And at least with the corporations, those numbers are very aggressive. So, you know, if you're saying, hey, it's a 2-year plan, and if you buy it in 1 year, you're paying 6% more. You buy it in 2 years, you're paying 12% more. And again, like you said, a lot of your payment is just going toward rent. It's like it would be better just to have a forced savings plan and put money away for that down payment. And in the meantime, get a fair rent where you can negotiate.
That's
right?
where I'm at. I just look at it. I'm like, why would somebody pay a higher rent? Then they're going to feel strapped as well. They're going to pay a higher rent where a portion of that goes to the seller as far as their down payment, versus hopefully keeping your rent lower and taking that rent that you would pay and putting it into a savings account. Put it into a high yield savings account, maybe make some money on it.
Yeah, exactly. And then, you know, remember, as a first time home buyer, if you haven't owned a home or been on title of a home in 3 years, that's the definition of a first time home buyer. Conventional will allow a 3% down payment. on your purchase, which I'm not saying it's not a lot of money. It is, but it's doable. If you think about, hey, if I'm going to go rent something, they're making me pay a first month's, last month's deposit, things of that nature, it adds up quickly.
Yeah, I agree. All right, let's jump into one of these articles. So this says, because this is one of the things that we talked about multiple times. We knew the Fed was meeting. We knew that it was very likely that they were going to be lowering the Fed funds rate. And everybody always says they lower the Fed funds rate and the mortgage rate's going to come down. But if we saw, right, the mortgage rate actually started to go down before they lowered the Fed funds rate, because the Mortgage Bankers Association kind of bakes that in. And then once the Fed actually cuts that rate, then mortgage rates bounce up a little bit. So, and everybody always asks why. So let's talk about that. So mortgage rates bounce higher following Fed rate cut. This says mortgage rates rise as market adjusts expectations. As widely anticipated, the Federal Reserve lowered its federal funds rate target by 25 basis points in its September Federal Open Market Committee meeting. However, with financial markets pricing in a more aggressive easing of monetary policy than the Federal Reserve might deliver, bond yields and mortgage rates rose in the following days. Mortgage markets are forward-looking, pricing in Fed moves ahead of time, similar to the pattern observed in September 24, when rates initially dropped in anticipation, but subsequently rose following the Fed's annual rate cut. Ultimately, incoming labor market and inflation data will determine the pace of future monetary policy changes, which that's one of the things that people forget about. In September 2024, they did the same thing and mortgage rates had come down and then they lowered it and then the mortgage rate stayed stagnant for the rest of the year.
The two words you said that are the most impactful here are forward looking. And, if you're looking at stocks, if you're looking at bonds, most people think that it's the action that creates the movement, and it's not. Mm-hmm. We've anticipated this cut for well over a month. So we already saw rate improvement starting at the very beginning of August. So the reason that we saw rates actually increase starting the day of the announcement is because Jerome Powell made comments, other Fed members made comments about how cautious they plan on being about additional cuts, how they're still concerned about inflation and other things, blah, blah, blah. So, you have to be on guard and you have to be ready to lock in a rate at the right time. Mm-hmm. And I've said this a million times, but a lot of people listen to their friends and family, they listen to their financial planners, but in reality, most financial planners don't know much about real estate as a high-level realtor, and they also don't know as much as a loan officer that tracks mortgage-backed securities every day. It can move very quickly. And yes, rates are up a little bit, but they're still near their best levels they've been at this year.
Yeah. And that's the big thing. Like I always tell people, Mike, the big thing is you've got to know, just like what you said, you got to know when to lock. Like I've had a few clients right now. I'm like, I really want you to find a house right now because the rates are low, but it has to be the right house. It has to be the right house. But with the rates this low, I want you to find a house.
There's usually windows of opportunity. Like you and I are working with somebody right now where I'm kind of leaning toward October 3rd is the next BLS jobs report, because that's what we are watching as loan officers right now. Mm-hmm. If we see weak labor, and I'm not trying to wish a weak economy, weak labor on the United States, but if we do see the weak labor we anticipate, that does bode well for cuts. It bodes well for mortgage rates, and anything that tends to be recessionary usually means we're going to see lower mortgage rates versus the opposite concern, which is the kryptonite for rates, and that is inflation or like positive economic news.
Right. So Bebop says, if I can afford a 10%, what does DP mean?
First-time home buyer.
Oh, a 10% down payment as a first-time home buyer. Yeah. Should I do it or a 3%?
Man, that is a great question. And good for you for being able to afford a 10% down payment as a first-time home buyer, because I'd say that's really, really better than most. Mm-hmm. At the end of the day, we're going to drill down to what's most important to you as a buyer, right? Are you more concerned with payment or money out of pocket? There might be some people I talk to that have 10%, and I'll say, well, what if you look at a 3 or 5% down payment and use some of those other funds and pay off this other debt? Or maybe you might want to put this money away, right? If we structure it correctly, we negotiate a deal where maybe a buy down, what have you, where we get you to that payment level we want. A lot of times people are amazed, like especially comparing like a 5% down versus a 10% down. The payment difference is sometimes negligible, where you're like, I would rather hold on to that extra $20,000 or whatever. I would say case by case, and really make sure, obviously I'd love to talk to you, to have a really legitimate analysis done of where's the best allocation of your funds.
That's some of the things that I talk to buyers about too, when they're going to talk to the lender, right? Is that they'll come to me and they'll say, well, I don't want to get a mortgage that's too big. I don't want a mortgage of, whatever the number is. And I always tell them, like, remember, think about it this way. Don't be so hung up on what your mortgage or what the loan amount is, because what we're really wanting you to look at is what is your monthly payment, because that's what you're buying. If you're going into a 30-year fixed payment, a 30-year fixed mortgage, like you're buying your payment. And if you can afford your payment, then the loan amount doesn't really matter. I know mentally sometimes for some people, they're like, oh my gosh, that just seems like such a big loan amount. And I understand that. But really it's what is the mortgage payment? It's the same thing that I say, like you might be able to go into, a mortgage company or a mortgage banker, mortgage broker and say, what can I qualify for? And they might tell you that you can qualify for $2 million. That doesn't mean that you have to go get $2 million. Now back into the mortgage payment. What's the mortgage payment that you're comfortable with? And then get a loan for that amount.
Exactly. I talk about that all the time. People say, what do I qualify for? I'm like, do you want to talk about what you qualify for? Or do you want to talk about what you want to qualify for? Because those are two very
totally
different
things
for a lot of people.
Right. No.
And I agree. You don't focus on the number, because at the end of the day, they call it depression mentality thinking. Back in the day, 100 years ago, people bought a house and they were supposed to pay it off within 5, 6, 7 years. And it was that was how it worked. Their goal was to pay off the mortgage. But most Americans, use it as a tool to accumulate wealth, with the idea of, hey, if I bought a $400,000 house today, and if I live in it for 5, 6, 7 years, then I have the appreciation that I built and I have the amortization that I paid down, and combine those, and then I can choose to move up, do something else. I mean, it's a tool to accumulate wealth. It's not something necessarily you should focus on.
So Bebop's next question is, what percentage of post-tax income should be spent on a mortgage?
That's a really loaded question in my opinion, because it really depends on you and your overhead. Do you have to deal with student loans? Do you have to take care or support other family members? What's your vehicle situation, things like that. I mean, ideally, pie in the sky, I would say the number that most would tell you would probably be, 31, 33%, something like that. But I'd say it's very specific to your scenario.
Yeah. All right, let's jump back into this. So, mortgage markets are looking forward. Pricing Fed moves ahead of time, similar to patterns observed. Okay, we got out of that. Okay. So impact on the housing market. For buyers who can afford a home and have been waiting for the right moment, now is a good time to look closely at what's available. While affordability remains a significant headwind, buyers have more negotiating power than in the past years. Homes are sitting on the market longer, providing more time for consideration. The median age of all listings on Zillow is currently 66 days, which is 12 days longer than the pre-pandemic average. Furthermore, 26% of listings have had a price cut, a slight pullback from the record high seen in July, but still an indicator of seller flexibility. Buyers shouldn't expect this window of opportunity to stay indefinitely. Sellers pulled back amid slower housing demand, with the number of new listings in August hitting new record low in Zillow's history data. Still, inventory is still near a 6-year high, even if new listings have stalled, meaning buyers have options on the shelves, even if they're not all fresh. That is the truth, not all fresh. We have got some stale listings for sure. Like as Kev Grant P said, the stale. There's definitely some stale listings, and people are sitting on the market. I talked to another seller's agent the other day for a house for a different buyer of mine, and I was talking to him about a house, a neighbor that's one street over, bigger, sold for listed for less money, and it's already under contract. And I said, you've got a comp that's coming that's not going to be great. Like, how flexible is the seller? He's like, not very flexible. If they don't sell it, they'll just rent it. And I'm like, they might want to rent it.
Yeah,
because
they might not be thrilled what they get the rent for.
I get it. I agree. I do. So it's tough because there are still some sellers out there and sellers agents, to be honest with you, that are sitting there telling other agents that have buyers, they're like, my seller doesn't have to sell. And my response to that is, then why is it on the market?
Right.
Because we seem to have a lot of those. And again, I take it all with a grain of salt, because oftentimes the seller's agent sometimes are saying what the seller has said to them. Like, I don't have to sell. I'm not going to. And sellers, believe it or not, sellers act differently when they have a piece of paper in front of them with an offer.
Yeah.
Oftentimes. So
it's reactionary, I think, too.
Yeah. I share honestly with my buyers, like what the seller's agent has said to me. At the same time, I always tell them, I'm like, that doesn't mean for you to do nothing, right? Just because they sound like they're puffing their chest and like they're not going to take an offer below, their list price and the whole thing, it doesn't mean that you can't still make an offer. And I encourage it if it's something you want to take a shot at. Can they say no? Sure, they can say no, but you can still make the offer and we can still take a shot at it and see. And again, those are some of the things that have been happening, and I'm seeing it on the market with some homes that are the prices are coming down a little farther, and homes are getting under contract after, a longer period of time when then when the house goes to close, there's going to be a bigger gap between that list price to sales price ratio. It's going to be bigger.
And obviously we're not talking about luxury here, but one thing I was just thinking about earlier today is, we had all these, the iBuyer companies out there. None of them are obviously buying as many homes, but B, their strategies are a lot more conservative than what they were a couple of years ago. And it used to be, if somebody wanted to dump their home, worst case is they just reach out to one of those companies, right? And sell their house for 10% less or whatever that number is. So I don't think that opportunity is there as much for sellers now. So, like an investor I was talking to this morning, a doctor that I've done a few investment purchases with, and he's like, I see some real opportunity out here. And I was saying, look, don't get so hung up on rates if you're going to put down 25%, because if you factor in getting a house for maybe $25,000 less than what you might pay at this time next year, do you really care about the $145 payment difference of trying to get to that 5.875 versus 6.375 interest rate?
Yeah. Well, and that's the thing that a lot of, again, the buyers just don't know how little some of the interest rate point differences, how little they actually affect their payment.
No, it's true. It's what we're taught. It's what's ingrained in us. A lot of buyers, like, they're not asking questions like, why is the HOA $300 a month for this house? Why are the property taxes $350 when a similar house is $200? But why is my payment difference $27 different?
Right.
0.125% in rate, right? Because that's just what people naturally focus on.
Right. All right. We're going to jump over to this article that talks about pending home sales post first decline in 3 months, even as mortgage rates dip. Now, I'm just going to say this from the standpoint of Arizona. Our pending sales has been going down for more than 3 months. So it says the weekly average mortgage rate dropped for the 9th straight week, dipping to an 11-month low. But would-be buyers are hesitant because prices are high and the economy is uncertain and new listings are dwindling. The weekly average mortgage rate has fallen to 6.26%, the lowest level in nearly a year, and down from roughly 6.8 at the start of the summer. The dip was in anticipation of the Fed's first interest rate cut of the year, but steadily falling mortgage rates, this marks the 9th straight week of declines, haven't brought many homebuyers to the market. Pending U.S. home sales dipped roughly 1% from a year earlier during the 4 weeks ending September 21st, the first decline in nearly 3 months. And while mortgage applications to refinance homes jumped 58% week over week during the second week of September, mortgage purchase applications rose just 3%. There are several reasons home buying demand isn't yet improving. Stubbornly high home prices. The median U.S. home sale price is up 2.2% year over year, the biggest increase in nearly 6 months. That's keeping monthly home payments or housing payments elevated despite falling mortgage rates. Mortgage rates haven't fallen enough. Redfin agents report that many would-be buyers are waiting for rates to fall below 6% before making a move, something that may or may not happen. Lack of fresh homes to choose from. New listings of homes for sale are essentially flat year over year as they have been for 2 months. The total number of homes for sale is up 8.6%, the smallest increase since the start of 2024, with new listings dwindling as home sellers react to the buyer's market. House hunters don't have many options. Economic uncertainty. Redfin agents say that house hunters are backing off because they're concerned about potential layoffs, ups and downs in the stock market, and general uncertainty about tariffs and possible recessions. I'm just going to stop right here because I will say when you're looking at the market and you break it out by price segments, right? When we start looking at the luxury market, that market is directly correlated to how the stock market is doing. Directly correlated. Like they don't track. They don't track the mortgage rates. They're not as sensitive to the mortgage rates at all. And our luxury market has been on fire. Now they did in the summertime, they did kind of hit a lull, and they kind of pulled back, but it's back.
Which is normal for summer.
It is normal because in the summertime, the luxury market just really goes quiet because most people go on vacation. I had talked to Tina about that a little bit too. And she's like, you still kind of say, is it seasonal? Is it somewhat of a pullback? And she was ambivalent to that about, really a hard, fast rule, but our luxury market is back. I mean, it's showing that, Paradise Valley was up on the Cromford Market Index. It was up by one of the times I think it was up by 70% month over month. It was crazy. Now it's fallen down just a little bit this last month, but it's been on fire. But back to what they were talking about, all the other points, it's the truth. I mean, buyers are having a hard time finding homes. Really hard time. All my buyers were really struggling to find homes because they don't all want a house where they have to do a bunch of work. They're willing to do some, but they don't want to do everything. And they're walking into some of these houses that have a price that's high, and they're looking at 5 different floorings. They're looking at cabinets that maybe either need to be painted or they need to be redone, countertops that are old, walls that need to be painted. Oftentimes, this is my favorite, the selling agent. I'm like, how about the roof and the air conditioning unit? Oh, the air conditioning, they get the air conditioner serviced every 6 months, and the roof, they've had no problems with it. I'm like, but they're original? Yep, they're original. And when I say original, that means they're 20 to 25 years old. And they're not expecting, the sellers are walking in thinking, oh, the buyers are just going to be okay with the fact that my roof is just fine. I haven't had any issues with it.
Yeah, what does that mean? It means, it's not leaking today.
I'm wondering how many roofs are going to be leaking after today.
I can think of one that I'm really interested in.
Right? Me too. That's really funny. But I mean, this is what we are seeing in our market. And as a listing agent, I always go in and talk to the sellers about how old is your air conditioning unit and how old is your roof. And it's like, if your air conditioning unit is old and you're getting it serviced and it's functioning, then we'll be okay. If your roof is old and it's going to come back and it's going to show that it's at the end of its life, I've got news for you. You are going to pay for a roof.
Yeah, it's inevitable. And that it does, especially on the higher end, it just shocks me that sellers are just thinking, oh, they won't catch this. This will be fine.
I know. The big thing too that I'm doing, and I've been doing this for the past few years, are sewer scopes, because our homes now are of the age where you really need to get those looked at for tree roots and anything like that. And the amount of times that the sewer scope comes back where something needs to be done is a lot.
Yeah, especially if you're looking in the central corridor, which seems to be one of literally the best investments you can make in the valley. It seems,
Yeah.
The right house. So many of those are just, those homes are, for us old, not like Boston old, right?
Right.
But they are legitimate 50 something years old. And, roots and all that just can get all up in there. So that can be a costly repair.
Right. And then I think, it's interesting. I think you and I were talking about this earlier too. There's that debate of when do buyers really get off the fence? Is it home prices or is it mortgage rates?
I'll send this to you. There's this woman put together a really sharp presentation. She surveyed 1,100 people aged 18 to 44 and asked all these potential home buyers questions. And what was most interesting to me was, where are they getting their information from?
Mm-hmm.
And 66% of those says that they are getting their getting home buying information from YouTube. So I think the problem is they're not all looking at people like you for real estate information. They're looking at doom and gloomers on TikTok that are not throwing out actual facts or data. They're just looking.
Well, they're looking at the crash bros that are
Yeah,
all out there telling you the market's
right.
going to crash.
Exactly right. So
don't buy.
Yeah. The challenge that we face is the trust levels are low in real estate agents and loan officers. And by the way, real estate agents were trusted at like a 33% clip.
Mm-hmm.
Loan officers at a whopping 20%. So it's our responsibility, like we're trying to do today, to get out accurate, real-time information, because it's very easy to seek all this misinformation out there.
Well, it's easy to say that the market's going to crash.
Yeah, it's super easy. We were talking about, Tina talked about this yesterday. Can you remember at the very beginning of the pandemic, all those people that were like, oh my God, home prices are about to drop by 25%, 30%. And I had some of those people that said, I'm not going to buy, call me in a year. And they talk to them in a year and they're like, yeah.
I wish I would have bought.
Yeah.
I should have bought. I know.
Yeah.
Well, to be fair to them, right? Mm-hmm. At the beginning of the pandemic, I remember thinking, this is going to be bad.
Yeah.
This is going to be bad for housing. This is going to be like, I don't know what I don't think anybody did. Nobody. That was so unexpected for it to, that was the hardest left that I think anybody's ever seen with the housing market.
But, as Tina was talking yesterday of Crawford Report, we did a podcast, and, the reality is these windows of opportunity have typically not been huge for buyers. And what I'm specifically talking about would be first-time home buyers. So we are in that market where we are clearly in a buyer's market where we can get concessions. We can make the seller fix the roof, fix the air conditioner, give us that new water heater, fix the pool pump, let us accept a contingency, those types of things. But when we go to balance, those opportunities are not going to be around necessarily. So that's why you can't focus on the rate necessarily of being a little bit lower, because you're going to make sacrifices in other areas.
Well, and that leads to one of the other things that that's going on right now. And that's, we are in a buyer's market, and everybody and Tina says this all the time, in a buyer's market, what do buyers want to do? Most often, they don't want to buy, because they think, well, it's just going to keep going lower. It's going to go lower. If I just wait a little longer, it's going to go lower. I want to buy at the bottom. And the reality is that we don't know when our bottom is for 3 to 6 months until we're out of the bottom.
Until we're past it.
Yeah.
Until we're past it.
So that's the big thing. And again, I've talked about this, here, I think for the last 3 weeks, because it just seems to come up, because it's just what's going on right now. It's that buying you're in a good position to buy if you can afford it and you can find the right thing for you, and it all makes sense in your budget.
Yeah, the perfect timing just doesn't exist. And I obviously been facing it lately with rates where, I had people teed up ready to go. But truthfully, as far as the best of the best pricing, it was about a 72-hour window.
Mm-hmm.
That's it. I mean, because the markets, they move quickly.
Yeah. I mean, and what's the rate at today?
Realistically, you could still get in the low sixes.
Yeah.
With good credit on a conventional loan. On a VA, FHA, you could be in the upper fives. And that's before like buy down strategies or paying discount costs or things like that. And of course, that's on the wholesale side. We shop like 50 investors. So, again, I know it's not 3%, right?
Right.
We're probably never not getting that again. And that's a conversation I had with an investor this morning. I'm like, brother, you're going to have to let the 3% in your head go. If you want to talk like upper fives, let's talk about what does that look like? What is the cost of waiting? And I think if I walk through with most people, they would understand that the cost of waiting is going to be significant because yes, maybe they can hope for that slightly less payment of $100, $150, but it's not going to be as much as you think. And remember, with that, you're losing your potential negotiating power for a lower price, closing costs, repairs, and all those things.
Right. All right. With that, I'm going to shift over to this other article because it says mortgage rates move closer to 6% and the forecast is getting sunnier. Housing market shows signs of recovery with rates expected to fall below 6% this year. I don't know if I believe that. I don't know, but we're going to read this article.
It all depends. October 3rd is the biggest day we have as far as the rest of this year. That will tell us what the Fed is going to do. Jerome Powell says all the time he is data dependent,
right?
And that will tell us. Now,
he's
PCE report. Sorry, the PCE report came in today at expectations, so there was no crazy inflation numbers today.
Yeah. So this says while impacts on mortgage origination volumes and home sales have yet to be keenly felt, declining mortgage rates appear to be putting the housing market in a better position for the final 3 months of 2025. On Tuesday, Housing Wire's Mortgage Rate Center showed that rates for locked 30-year conforming loans averaged 6.33%, a 12 basis points lower than a week ago. Rates for 30-year jumbo loans fell 3 basis points to 6.23%, while 30-year loans through the Federal Housing Administration, of the FHA, dropped 6 basis points to 6.16%. Matt Vernon, the head of the consumer lending at Bank of America, told Housing Wire via email that recent rate declines have prompted increased activity in the refinance market, through both rate and term and cash out refis. Most people are focused on rate and term refinances to lower their monthly payments, while some are also looking to tap into their home equity, Vernon said. For example, HELOC rates dropped quickly after the Fed's recent cut. Overall, their cautious optimism, people are trying to pay attention, but bigger market challenges remain. In the purchase market, Vernon noted that starter homes are a bright spot as first-time home buyers and borrowers with affordability hurdles have gravitated towards them. Redfin recently reported that pending home sales of starter homes, those priced among the bottom 35% of local markets, were up 10.2% annually in July to reach their highest level in nearly 3 years. That was likely driven by slower price appreciation, as the 4.2% year-over-year growth for starter home segment was the lowest among the 4 price tiers tracked by Redfin. The good news is that the Fed continues cutting rates. Mortgage rates should come down even more. Bank of America expects another cut in December, plus 75 basis points of a cut through 2026. Buyers are noticing too. Our latest home buyer insight report shows that 52% of the market feel better than last year, and 75% expect prices and rates to go down. Similar observations were noted in the forecast released Tuesday by Fannie Mae economists. They call for mortgage rates to end 2025 and 2026 at 6.4 and 5.9% respectively, down from their prior estimates of 6.5 and 6.1. Fannie Mae also downwardly revised its home sale projections through the next year, while calling for annualized inflation through the CPI to moderate to 3.1% in the fourth quarter of 2025. So what will the Fed do next? Housing market professionals will be closely watching the Federal Reserve in the coming months, as the likelihood for further cuts in October and December are relatively high. According to the CME Group FedWatch tool, 92% of interest rate traders are projecting a 25% basis cut at the end of October, which would bring the federal funds rate to the range of 3.75% to 4%. It hasn't been that low since November of 2022, when the central bank was squarely in the middle of a series of rate hikes to combat 40-year high inflation. 3/4 of interest rate traders say the Fed funds rate will fall another 25 basis points in December, but there are hurdles to navigate before this could become a reality, Vernon noted. The biggest challenge to more Fed rate cuts or lower mortgage rates are inflation and the overall health of the economy. Even if the Fed lowers its key rate, rising prices or unexpected economic challenges could push mortgage rates back up. Mortgage rates track the bond market, specifically the 10-year Treasury, which doesn't always move in sync with the Fed decisions. Lower rates can make buying or refinancing easier, but high home prices are still a challenge for many buyers. That's why it's often smarter to focus on what you can afford today rather than waiting for rates to drop further. I think we heard that somewhere. Fed Governors Stephen Miron and Michelle Bowman spoke publicly this week about the state of the U.S. economy and offered their views on the path for monetary policy. On Monday in New York City, Miron, who was the only Fed official to support a 50 basis point rate cut last week, said that the appropriate policy rate is roughly 2% points lower than where it currently stands. The Federal Reserve has been entrusted with the important goal of promoting price stability for the good of all American households and businesses, and I am committed to bringing inflation sustainability back to 2%. However, leaving policy restrictive by such large degree brings significant risk for the Fed's employment mandate. On Tuesday in Asheville, North Carolina, Bowman reiterated her stance that the Fed should have started rate cuts sooner, adding, as trade policy has become more certain, tariffs will have only a small and short-lived effect on inflation going forward. I'm in that camp of I think they kept them up too long.
No, they did, without question. And what's really interesting is typically the Fed, the voting members, they usually are aligned pretty closely together, and it's not a divisive group or outspoken group. And now Miron is far and away the most outspoken member right now. But you are seeing a lot of dissension in the ranks. There are varying opinions, and you have 12 voters on these policies. So it's going to get real, I think, in these next couple of meetings.
Well, and I think that, some of them are saying like, look, we gotta make some changes here. What we've been doing hasn't been working. And I mean, I am by no means an economist, and by no means, a member of this deciding group, but the stagnation in this is kind of keeping everybody stuck, because they're all just kind of waiting. And their point in there to say that HELOC interest rates have gone down significantly. I have a HELOC, nothing on it, but I have a HELOC and I look at it when I get my statements. It barely went down. Yeah,
it's not a huge help. It does help people on car loans, credit card interest rates. And who cares if the interest rate is 29.5 instead of 30? There needs to be a lot more movement. And I was talking to a good friend of mine who's a real estate agent up in Northern Arizona today. And he's like, we are really paying the price for the pandemic today, because a lot of it in part because of the Fed, because they were so slow to react, like they always are. They should have been raising these rates early. And that's what Michelle Bowman was alluding to. It's like, we waited too late last time. Now what are we going to wait for, unemployment to jump up to 4.5, 4.6, and then it's too late. We should have pulled the trigger earlier. So
right. No, I'm with you. I don't think it's a good idea for them to wait too long. I think that I'd like to see them make a 50 basis point cut the next time.
I would love it. I mean, by the way, that CME group you referenced, it's a public website. You can go on there and look at any time and see it's kind of like the poly market, like the betting odds, and seeing what the percentages are. So 92% of another cut in October. That's great. Now, if we got some amazing jobs report on October 3rd, you're going to see that percentage shoot down. Sure. But I think right now the market is baking in a second cut. But I think we got some pullback because they're a little worried about the tariffs, and they're a little worried about what Jerome Powell's going to say. Because the reality is it's unfortunate, but based upon comments of the Fed members, they do drive the bond market as well.
Yeah. Yeah. So it's nuts. I wanted to I'm going to look at this. I'm going to pull this up because this has to do, we talked about this a little bit. I wanted to bring up one thing because you and I were talking about this before we went live, and it's something that is, I think, a big, it's something to think about, and it's something that talks about how our market moves, right? Because our market is not like a lot of the other markets in other states and even in other bigger cities where people buy houses and they would stay, right? Our market is very fluid. It always has been. And the average length of time that anybody owns a home here has been about 5 to 7 years. And that has increased. And I think that has increased because of these interest rates. People that have these low interest rates, they'd like to move, but they're just staying in place. And this is not just the seniors or the baby boomers, which that's where you hear a lot of, and these poor baby boomers get blamed for everything. I feel like that, they're like, well, if you would just move out of your house, then, you would have, one of us would be able to buy it. It's like, well, if they love their house and they have it's paid off and they don't need to move, like, why would they move? I wouldn't move.
Right. We're lacking that churn in the market, right? Where we have potential move up, move down buyers. And they're like, you know what? As much as I would love to move up, love to move down,
I'm just going to stay.
I'll just stay right now.
Right. And I mean, I feel like I know a lot of people that are like that. They're like, I'd love to buy another house and move up, with my family, whatever. And they're like, I'm just going to stay put for now.
The thing is, I don't think we're that far away from it, because really, if you think about it, I'd locked in a few conventional refis at 5.99, 6.125. I mean, if we get to say 5.75, isn't that reasonable now to finance?
I think we get at 6 or just below 6 and all bets are off.
I think so too. And it's not like building permits are skyrocketing. There's not all this new inventory hitting the market here, right?
No.
We might have a lot of construction on the outskirts, but for those not looking at the extreme outskirts, what's here is here.
Absolutely. I'm going to pull this up just because I think it's good to show some of the Cromford report, because we've been talking about this. So this is showing our active listings. So this tells you how many homes are on the market. And so in the beginning of the year, when everyone was kind of like, oh my gosh, our market it's so bad. And, we're just getting all these homes on the market and all the prices are going to start coming down. This is what we saw. And then when we hit, was this April, it went flat. And then by the end of May, it started coming down. But just recently, right about here in August, it started to go back up again. And in all honesty, this has been a good thing. And I think this is one of the things that has kind of made the market start to feel like it's moving again, because some of these homes that have come on the market are decent homes. They've had some updates. They've,
Right.
They've done some repairs, and those homes are actually moving. The problem, though, that I'm seeing is some of these people are homeowners that have only owned the home for 2, maybe 3 years. And now they're looking to the agent to say, how much money did I make? What can I list my home for? And it's like, ugh,
right.
It's tough. Like, let's talk about all the things you did to the home and understand that you're not going to get dollar for dollar back for all of this stuff, but you should get something, but it's not maybe going to be what you think it's going to be. And that's the hard part.
Right. And then, newsflash to the Crash Bros, what are we, the 5th largest city? 21,577. It's nothing.
So to put it in perspective, and I've talked about this before, but to put it into perspective for those that haven't heard me say this, when our market was crashing in 2008, we had 58,000 listings on the market. So we're drastically different right now. So all these people that are
bigger.
Right. All these people that are saying, oh my gosh, we've got so much inventory, our inventory is going up and it's skyrocketing and the whole thing. This is not skyrocketing inventory.
And that's also a different type of economy in Arizona than we had.
Right. I know you're going to have to watch me do this. Sorry, but I'm going to pull this up as well. I'm going to pull this. well, let's see. Sorry. Median sales price. I always think this is good. Now this is everything. So this shows you also kind of where we were. So down here in July, we kind of hit a little bit of a lull, and now it's popped back up. So in September, our median sales price is $457,745. Again, this was May in 2022. That was our peak at 480. So it's down a little bit. And that's why I'd say to all these people, and this is, Tina always talks about this, anybody that bought back here in 2021, you are still just fine as far as appreciation is concerned. I wanted to pull up the pending. Hold on, let me find it.
Yeah, I was going to say, what was the Cromford Market Index in May of 21?
Oh gosh.
It was, I'm looking at it right now.
You are? What was it?
In May, it was about 460. So it was an extreme seller's market.
Yeah. So here are our pending home sales. So the purple line is 2024. The red line is 2025. I mean, we're really tracking with 2024. To me, this second half of the year is going to be telling. And I think it could end up doing this. I think it could end up kind of going up just a little bit. I think it's going to stay above 2024.
And one of the, if we get some, I don't want to say closure, but if we get a clear path over the next couple of weeks about, our rates going to be stable, that's what the market wants to look at. That's what they want to see. People want to see stability.
Right.
So Tina noted that even when we had started to have a good run for a couple of weeks, why was it? It's because rates were flat. People want to know, are rates going up? Are they going down? Right. Do I wait? Do I not buy? But if the more stability we can see in terms of rates, the more stability we will see in terms of the market.
I know. Yep. Completely. All right. So let's jump over. I asked this question yesterday. I said, do you think the housing market is about to crash, correct, or bounce back stronger? 17% said it's crashing hard. 60% said just a market correction. 19% said bouncing back. And 4% said, I don't trust anything until the Fed talks. I think that's interesting. That I don't trust anything until the Fed talks. But I the 60% that said just a market correction, I'm in that camp. I'm in that camp that we're in a market correction, and then I think that we're going to bounce back. And I think when we bounce back, or to what level we bounce back, is all going to be dependent upon interest rates. I know everybody wants to talk about home prices, but again, I don't see home prices coming down significantly. I think it's all going to be driven by interest rates.
I agree.
Yeah. So that's what we got today, guys. I appreciate everybody tuning in. Matt, thank you very much.
Yeah, thank you. Thankfully, the rain started to slow down, so it wasn't so loud. It
slowed down where you are, and it just massively picked up where I am.
Oh, fair.
Yeah. So it is pouring. It looks like it's nighttime outside right now where I am. I mean, what's the saying? Whenever it rains in Arizona, the number one saying, we need the rain.
We need the rain.
Well,
unless you have a bad roof and you're trying to sell your house. Then you don't need it.
I know. But I bet there's some real estate agents getting phone calls right now from sellers that are having that conversation, and then some other buyers agents getting that call that say, so the seller's roof just started leaking. Don't worry, they're getting it fixed. Because that's the deal. If it's broken before, even if it didn't come up on the inspection, if it's broken before the transaction closes and transfers, then the seller has to fix it.
No, but obviously do your due diligence. It's so important to do your due diligence. I know I know that you are a pro when it comes to like knocking out your inspections for your buyers before, because it is so important.
I try. But the reality is, and I tell them all this too, I'm like, we can do every inspection in the world and you're still going to move in, and there's going to be something that you find that wasn't caught. It just happens.
Yeah.
And it's at no fault of anybody's, but it just happens because you're moving things. And I mean, it happened to me when we moved into our house. I'm sure it happened to you. I mean, every person that I know it happens to, and it's not any fault of your agent or the inspector or anything. It just happens. So,
Good.
Well, everybody, if you're in Arizona, stay dry and safe.
Stay dry.
And if you're not, have a great weekend. Thanks, everybody. See you next time.